Hello, welcome back to the channel. It's nice to have you here again. Shout out to all of our subscribers. And also I want to say hooray to our most recent subscribers, and I also want to compel you, if you are yet to subscribe or your first time viewer, if you're seeing this in conclusion, in overall, if you're viewing this and you're yet to subscribe, please kindly hit the subscribe button so that you get notified whenever we drop an insightful video like this, so you don't miss out on any detailed, updates, financial updates and insights and investment updates that you could get here at Service of the Market. So my symptoms sounding low. Okay, today we're taking an overview of Dangote Sugar Refinery's earnings per share, which is spanning through 10 years, which is 2014 to 2023. And as is our custom, I'd like to do a brief of Dangote Sugar Refinery PLC. And I know everyone is familiar with Dangote, but then Dangote is actually a group that has different subsidiaries. They have the Dangote Sugar Refinery, which is what we're looking at today. They have the Dangote Petroleum Refinery. They have the Dangote Cement, which is one of the most prominent, and that has ending a lot of boxes across Africa, and that kept him the richest man. That's kept him in the position of richest man in Africa for a couple of years until recently. So okay, so let's just dive into today's video. So Dangote Sugar Refinery PLC was actually incorporated in 1998. They have their headquarters in Lagos, Nigeria, and like I said before, they are a subsidiary of Dangote Group, which makes Dangote Group their parent company, and they have a production capacity of 1.44 million metric tons per annum. And aside refined sugar, they also produce molasses, and they use a profound technology which is called the state-of-the-art refining technology, and that was brought in from Germany. So their production processes, let me just run you through a bit of that. So they import raw sugar, they refine the sugar, and then they package it. Their products include Dangote sugar, the refined one, the molasses, which is used for which is animal feed, industrial applications, and all of that. Then you have the ethanol, which is biofuels and pharmaceuticals, and then the industrial sugars, that is for breweries, bakeries, and food processing. So I'll just walk you through a bit of their revenue. So this is a record of 2022. So in 2022, they had a revenue of 234.8 billion, and for that year, they had net profits, which is what was theirs to keep, was 26.7 billion. That's staggering. And the market cap in 2022 was 384 billion and approximately 1.04 billion USD. And the subsidiaries, they have Savannah Sugar Company Limited in Nigeria with 32 hectares of sugarcane plantation, and they have the Sefako Sugar South Africa with 10 hectares of sugarcane plantation in Nigeria. Also, this company has bagged some awards and recognition. In 2019, they bagged the most compliance company in Nigeria, which was awarded them by the National Environment Standards and Regulation Enforcement Agency. And in 2020, they bagged the best sugar refinery in Nigeria, and that was awarded them by the Nigerian Institute of Food Science and Technology. Well, as we all know, regardless of how good and how well every company is performing, they also have their inherent challenges. And for Dangote Sugar Refinery, some of the challenges include raw sugar importation costs, competition from small good sugar. They have also the regulatory framework uncertainty and also environmental concerns. And also, we know that regardless of how well a company is doing, they also have future plans. Now, for Dangote Sugar Refinery, their future plan is to expand their refining capacity to 2.5 metric ton per annum, which is almost a double of what they have right now, because currently they have 1.44 million metric ton per annum, and that's a good goal. Yeah, it's a good target to set, and I trust and hope that they would meet that target, because it's a good thing for the economy. And also they intend to increase their local sugar production through backward integration, which is sugarcane plantation and all of that, and diversify into biofuels and other value added products, even sustainable energy. And so some of their corporate social responsibility include community development projects like healthcare and education, scholarship programs for local students. So if you're a student, you might want to look that up and check if you are eligible, and just search that. And also they also have environmental conservative initiative. And lastly, they have an employee base of over 3,000, and their revenue growth rate in 2020 to 2022 was about 15%. And I think that will be all for Dangote Sugar Refinery. There's a whole lot more. If you want to know more about them, just look up their website, and I trust that you will get a whole lot of more insights from that. So let's just dive in quick, so this video is not extensively long. So earnings per share is what we are looking at for this company. We want to see how profitable this company is in comparison with other companies. Is it a good place to invest? How well are they performing? Are they struggling? Are they above the line? And how much above the line are they? Do they need to improve their performance and all of that? So that's what we're looking at today. Alright, but first, what's the earnings per share? What's the earnings per share saying? What's it communicating? And what are the implications? So the earnings per share is actually a metric that measures the profitability of a particular company in per share basis. So it's saying that, how profitable this company is, maybe per naira that they make, what's the profit per share. So now I want to establish should I say benchmark now? Okay, so for these the bigger the merrier. The bigger the earnings per share, the merrier. The bigger the better. So if you are doing your research and you're checking for maybe a company to invest in, or you want to compare the performance of two companies and all of that, so a good place to look at is the earnings per share. And what does it say? It's saying that the higher the better. So the bigger the earnings per share, the better for the company. So the company with the higher earnings per share is in better financial state and in better financial condition than the one with the low earnings per share. So an earnings per share below 0.5 is very low, shows a very low profitability. From 0.5 to 2 shows low profitability. From 2 to 5, from 2 naira to 5 naira. Now this values are supposed to be naira. From 2 naira to 5 naira shows moderate profitability. So as I'm giving this interpretation now, you can begin to see what the chart is communicating. And then from 5 to 10 naira shows high profitability. From 10 naira upwards show very high profitability. Now this can also be relative to industry. Now this is Dangote Sugar Refinery can be categorized under the manufacturing industry. So for the manufacturing industry, their benchmark is 1 to 3 earnings per share. So that's in Nigeria. And so we have earnings per excuse me. So the manufacturing industry, they have 1 to 3. So anything between 1 naira and 3 naira earning per share is a good one. So we can then begin to use that to analyze the profitability of Dangote Sugar Refinery. So if we are seeing an increasing earnings per share, it shows a positive trend. A decreasing one shows a negative trend, and a stable one shows a stable trend. So how does this inform your investment decisions or investors' decisions? So if the earning per share is high, it actually attracts investment opportunities. So this is why companies struggle and thrive to make sure that this thing is on the rise, so that it doesn't drive off or throw off investors. So, and if there is a low EPS, it shows that caution is advised, which is what this company was doing in the year 2024. And a growing EPS shows potential for long-term growth. That was the case of this company until 2023. So also keep in mind, before we look at value, I want you to keep in mind that the earnings per share is just one metric. So you can also consider the other metrics like the P&E ratio, the dividend, and all of that. So an industry benchmark varies. So like I've mentioned before, we have the financial industry, we have the manufacturing industry, we have the oil and gas sector, and all of that. So it is good to ensure that if you are comparing two companies, those two companies are in the same industry. So, and also analyzing historical data can also be a good one. And the 10 years, I think 10 years is a good one for us. Yeah. So based on the interpreted framework for the earnings per share that I gave earlier, let's now see what this particular chart is telling us. So remember, the metric for this industry is, the benchmark for this industry is 1 to 1 naira to 3 naira. It's a good one. And let's just run through charts with that. Okay, so for 2019, they had 0.09, which is below 1. So that is actually showing a very low earnings per share. But fortunately for them, they were able to come out of that surge. In 2015, they moved above the line. They were between the benchmark, which is 1 to 3, and 1 to 3 naira, which is fine. And then they were able to increase that a bit also in 2018, and in 2019 they even moved above the metric. So they were able to maintain that for 8 years, and then until 2022, from whence they experienced a drastic decline. So it was far below the benchmark, and I believe that they are actually putting all measures in place to ensure that this they at least fall back into the benchmark, and then begin to make plans to exceed that too. So just a quick recap of what the earnings per share is. So the earnings per share is a metric that measures the profitability of a particular company. So it's a very, no one can actually make an investment without having an idea of what the earnings per share of the company is. So it's actually a blind investment, totally blind investment, to not know what the earnings per share is, and that's a mistake that a whole lot of people make. So for instance, let's just imagine that for the past 10 years this company has been below the line for the space of 10 years. That's a red flag for investors. But if you are unaware, if you are ignorant of that, and you go and put your money there, come on, that's a total investment. That's an absolute investment error. So just take note of this as an investor, a financial enthusiast, a business owner. So if you're a business owner, you might want to always keep your values above the line and within industry benchmark, so that you are standing out among your competitors, and you are also attracting investors and creditors. So apart from that, I don't think there's anything else. All other things is left with our viewers. So if you have a different opinion, you want us to look at the earnings per share of a particular company, or you think there's a better way we can also express this metric, kindly drop that in the chat box, in the comment section, and we'll be glad to reply you as soon as possible. And aside from that, I don't think there's anything else. We've covered and everything that there is to cover with regards to this chart. So, and thank you for staying. Thank you for watching to the end. And then I'll see you in my next video. Bye bye.